Welcome to Wealth Matters episode. How are you today, Michael?
I'm doing very well. Thanks for having me, Alpesh.
Absolutely. I've been following you for about, I would say, 2 to 3 years. Of course, followed your post on Facebook. I enjoyed them. And we had chatted about a year ago. So we kind of know each other for some time. But, I enjoyed what you have been sharing with people and what you have achieved in self-storage world. So what's your current focus right now?
Yeah, well, I'm all in on self storage. I don't really focus on anything that doesn't involve storage from a business standpoint,
Okay.
anyways. I've got two big projects going down in the Carolinas, and aside from that, it's most of my focus is dedicated to my students, helping them get their first or second properties up and off the ground.
That's awesome. So how did you get started in real estate?
Yeah, well, back in 2007, I was a physical therapist by trade, and
Oh, interesting.
yeah, I knew I wanted to do something different, and so I got into multifamily, small multifamily, 2 to 4 unit buildings, and I did the landlording thing for about I don't know 3.5, 4 years.
Mm-hmm.
And if I'm being honest, that's as much as I could tolerate of it. Not to say anything bad about it. I'm very grateful for what I learned during those 2 years of my life, but one of those things was that landlording just wasn't. I wasn't cut out for it. I'll put it that way. And so I decided to look. I knew I wanted to be in real estate, but I wanted to look at different strategies, and that's when I stumbled on storage. It was something that basically I could carry over what I learned as a landlord, but a lot of the things that drove me crazy about landlording and rental property didn't seem like they'd be as big a challenge for me in the storage world, and that's what I decided to do.
So you kind of elaborated on that, but why self-storage facilities? What else, right? You mentioned about tenants. What else? And what was the reason behind you switching to self-storage?
Sure. So in the landlording world, I just wasn't getting where I wanted to go fast enough. It was, a house or two at a time, and it had taken me several years to get to the point where I was at 31 apartments. But when I did the math, I needed like 100 to 150 apartments to quit my
Right.
day job. And, you know, that was a decade away. And so one
Yeah.
was the speed, right? The economies of scale that storage offers. To give you an idea, I needed 31 apartments and I wasn't even close to quitting my job. And when I shifted my focus to storage, I actually quit my job the day I bought my first storage facility.
Wow. So tell us about it. What was that first storage facility?
Well, and I want to add a disclaimer that this is not necessarily what I would recommend for newer folks getting started. I was just in a position where, one, I was fortunate to have the support of my wife. We lived below our means, so we could afford to take the risk. But essentially, I quit a decent paying job as a physical therapist to buy a property that on the day I bought it was losing $2,000 a month.
Oh, wow.
It was a smaller facility, only about 10,000 square feet, but it had a lot of outdoor storage and some room to expand. And it was only 55% full. So my brain thought, well, hey, if we fill it up, it'll be worth almost double. And that might have been a little naive. But the truth is that's exactly what happened. 9 months later, we were full, and I had bought it for all in. My acquisition cost was $350,000, and 9 months later, I had an appraisal at $750,000.
Wow. Wow.
So it worked well. We were able to refinance and expand several times over the course of the years. And then that first property I actually just sold last year.
That's awesome.
Yeah.
So can you compare self-storage as investment to multifamily or single family? I know toilets, etc.
Sure. Yeah, well, for one, there's a lot of similarities, right? The fundamentals are the same. All we're doing is buying and owning real estate that we then rent out to other people at a price that is greater than our cost to own and operate it, right? It's no different in that regard.
Yeah.
The big difference, probably the two biggest differences are this. One is the income to expense ratio, where the industry standard in multifamily is, generally speaking,
3 times.
For every dollar you bring in rent, you're going to spend about half of it on operating expenses.
Right. Oh, yeah. Yeah.
In the storage world, it's about 30 cents of every dollar that goes to
okay.
operating expenses. And so you've got that extra
That's
20
a big
cents on the
difference.
dollar
Yes.
to, in my case, screw things up and still come out ahead, right? Like,
Right. That's true. Yeah.
so there's that. And one of the things that contributes to that, and even more importantly to me, the thing that would alleviate the high blood pressure that I had as a landlord, was the eviction process. We don't have
I'm
we
with
don't
you.
have an eviction process. We've got a lien law process where if someone stops paying us, we simply go through the state procedures and then a month or two later auction their stuff off. And we get our empty unit back and we can rent it out again, which anyone who's done any landlording or multifamily understands that that's a whole lot more streamlined compared to the eviction process.
Yep. No, that's a great point too. And also not needing to, spend a lot of money on repair and maintenance as well as time that you're not going to hear from your tenants, right?
Right.
Most of the time.
Absolutely. I mean, these buildings, for the most part, are metal walls with metal doors, metal roofs on concrete slabs, and a lot of times a gravel parking lot, maybe asphalt if you've got a fancy operation going. But compare that to rent residential real estate where you've got drywall and toilets and air conditioners and heating units and bathtubs and everything else that can break. That as the landlord you have to fix. It's just I'm a keep it simple, stupid kind of guy, and so storage lends itself really well to that.
Oh, that's great. So also on the self-storage world, you are pretty much operating in a much lower price range too, right? Than a multifamily or something, because tenants don't have to pay 750 or $1,000 to rent. This is 30, 40, $50, right? So it's more of like a coffee money or something, right? Which they don't care about.
Right. It is definitely a smaller purchase decision for the consumer, and I think that plays a big role. And this whole industry is based on inertia, right? The idea is once the customer's there, it's largely easier for them to continue to cut a check for 50 or $100 than it is for them to get a U-Haul, move their stuff to someplace wherever they can, right? And so it's just a matter of attracting the customers. So marketing and advertising are critical to our success, but it's not rocket science by any stretch.
Yeah, because I do know some of my friends, they have put stuff in self-storage and they have forgotten about it. One of my friend who was renovating his property and the renovation was completed, pretty much he gutted it out and rebuilt. And I spoke with him a couple of months ago and he said, oh yeah, he's totally forgot about it. The stuff is still there in self-storage for the last 2 years, even though he moved into his new house or the property.
Yes, we see that all too often.
Right. So do you see any kind of issues with self-storage, like any maintenance stuff or eviction? You mentioned about eviction, but how easy is it? Can you auction stuff off, or what do you?
Sure. Yeah, the auction process is really straightforward. It's, certainly it's an area that you could get tripped up on if you don't follow the letter of the law, but every state has lien laws. They differ a little bit from state to state, but by and large, they just have notification requirements and timelines that we have to follow. As long as you follow those, it's really, really straightforward. Not to mention we have insurance for unlawful sale in case we mix something up and auction it too soon or without doing the proper procedure. The biggest thing for me about storage is it's simple, and comparatively speaking, it's been much easier. I found storage to be much easier than residential rental real estate. But that doesn't mean it's all roses, right? There are challenges. You've got to have the proper systems. The one thing is in storage, as a landlord, I had to learn that when I was a landlord, if someone called for a 2-bedroom apartment, I could just, if they called during dinner, I could just let the call go to voicemail, call them back the next day, and they wouldn't have found an apartment yet. And I could still have a customer. In the storage world, really the key to success is serving the customer immediately when they have the need. And so for many years, that was me being an idiot and answering the phone myself, even if it was during dinner, because that's what it takes to be successful. Now, since then I've learned there's better ways to do it.
Processes, systems, right?
Exactly. And I've got a call center now that handles all that.
Awesome.
An online portal where customers can do the self-service thing, move themselves in and out and pay rent. So as long as you're willing to learn the systems and put them in place, there's really not a ton of stuff to get tripped up on.
Interesting. So let's say I want to, and I reached out to you about a year ago because I was trying to figure out if self-storage is a viable option for me. But let's say someone like me who is a beginner, of course, has been investing in multifamily or single family and wants to get started in self-storage. What are some of the steps they should take?
Yeah, that's a good question. And I always recommend that folks get smart on an industry, not only before they get started, but before they decide to get started,
Yes.
right? I'm a big believer in life-work balance. I think as much as I love storage, it's not the thing that excites me when I wake up in the morning. It's securely in the position as a means to an end. It's the vehicle or a tool that allows me to meet my financial needs in pretty short order so that I can enjoy life and spend time with my family and do the things that are important to me. So that being said, storage is the best thing I found, but it doesn't mean it's right for everybody. And so I would want people to explore the nuances of the industry.
Yep, exactly.
I believe so strongly in that I basically publish more or less all of the nuts and bolts storage stuff for free on YouTube and Facebook. And I just put it out there because I believe that my role on this planet is to be a conduit of the many blessings I've experienced. So storage being one of those, I don't want the things that I've learned to end at me. I want to share them with other people. And as much as I can do that for free, I do. When people want additional opportunities, certainly I do have some paid trainings and that sort of thing, but I'm not here to sell those. That's for people to find if they decide they want to. But I always recommend, if you just search at Storage Rebellion on either Facebook or YouTube, you'll find hours and hours of content.
And I do recommend people check that out because that's how I found Michael, and I enjoyed some of those videos. They were very informative and educational. No, absolutely. And I appreciate you for doing that.
Yeah,
so
absolutely.
What are some of the gotchas investor needs to keep in mind while investing in self-storage?
That's an excellent question. And, this industry is relatively young. It got really only came into its heyday starting in the 80s, and then it exploded thereafter. Back in the day, you could just put up a bunch of garages in the middle of any cornfield in the country and you would make money.
Right.
Clearly, the industry has matured and is more sophisticated these days. And so making sure you understand the market, making sure you're looking at the proper supply and demand metrics, and really not falling victim to the idea that this is just mailbox money, right? There's strategy involved, and there's different ways to invest. One of the vulnerabilities that I see right now in today's market, and it's not to say it can't be done successfully today, but I take pause with new developments right now.
Oh, really? Okay.
Not to say that you can't make money in them, and there's a lot of good ones out there that you could invest into, or if you had some land and wanted to invest, there's a chance it might work. But with the economy that we currently have, where there's some uncertainty about what it's going to look like 2 to 3 to 4 years from now, combined with the very long runway that ground up development requires, I think there's some vulnerability there. Because if you're going to find some land, get approvals, do the build out, and then wait for it to be filled up over the course of 2 to 3 years, you're looking at a 5 to 7 year project.
Right.
And a lot of times new development is based on, hey, we're going to spend $6 million and it'll be worth $9 million when we're done. Well, that's based on a cap rate. And 7 years from now, we have no idea what the cap rate
is. And if the market shifts, you don't know what's going to happen.
and so I see that as a potential gotcha. Again, I want to emphasize, it doesn't mean there aren't great development project opportunities out there. It's just, I prefer to buy existing properties that where I can still add value to them by increasing occupancy, raising rents,
Okay.
cleaning them up, making, improving the operations, all of
Right.
that stuff. And then if they support themselves, I can use the cash flow to expand and basically develop a property, but do it in small phases, 5 or 10,000
I
square
see. I
feet at a
see.
time. And
Yeah.
that allows me to kind of get real-time market feedback
Right.
and kind of hit the gas or the brake depending on what I'm learning. Whereas when you go for a development, you're basically swinging for the fences from day one, and you
Right.
can't stop halfway through because you're going to be on the wrong side of
No,
zero still.
no. And most of the time you are looking at profit at the back end of the deal, right? When you exit out, when you're developing. But as you said, if you buy a distressed property and you put systems and process in place, maybe automate the entire thing. Now 24-hour access, right? You have a gate code and all the nice Wi-Fi stuff, right? Which you could
Right.
do with the property, and you can just raise the occupancy right there and use that money to maybe develop something. Because I was looking at one of the property where they had like 5-6 acre, but the property, the build out is only in couple of acres, so you have
Mm-hmm.
so much land to expand, and if you have cash coming in, you can leverage that cash for expanding.
Exactly.
Oh, that's a great point. So what kind of rookie mistakes have you seen beginner investors make while investing in self-storage?
Well, I'll point the finger squarely at me, right? The first property I ever bought, this is something I just didn't know as a rookie. These buildings, largely the ones I invest in, aren't air conditioned or heated. They're just traditional storage.
Okay.
So I had
So
no idea.
non-climate controlled, right? Something like that.
Correct.
Okay.
And so I had no idea that anyone would want that unit to be insulated.
Hmm.
So my first property was
Oh.
not insulated. And the first January I owned it up here in New York, we get these 70-degree
Oh,
days in
wow.
January. And it was raining on the inside of the unit because of condensation.
Oh, wow.
The condensation was forming on the underside of the roof, just like it
Right,
would on the
right.
outside of your beer can,
Of
right?
course.
And and
Wow.
I ended up having to rip off 10,000 square feet of roof, insulate it, and then put the roof back on.
Oh, my God. That's a good lesson
Yeah.
right there.
Yes. And the other thing is, another challenge I had on my first property was with the access control, the electronic security gates that
Hmm.
we install. There's a lot of companies out there that do that, some better than others, and I'll leave it at that. But you just want to know what you're signing up for
Right,
before you shell out a couple $1,000s. Because if the service isn't there after the purchase, it can be a frustrating experience. That's for sure.
right, right. Hey, so do you prefer climate controlled or non-climate control, and why?
I have trended toward non-climate control, and it's actually not a preference about the offering itself. Although there are less moving parts when it's traditional storage versus climate control, less
Right.
maintenance
That's
on the
true.
HVAC,
That is true.
but a simple HVAC system is not going to be, a deal breaker for me. One of my students is actually in the process of buying a climate control property, so we're not opposed to it in any way. But what I found is that in the markets I like to operate in, the secondary and tertiary markets, the
Uh-huh.
smaller rural areas, there's usually not a great ROI on the climate controller. So
Oh, okay.
it usually doesn't make sense. And if it does, it's a very small portion of the
I
overall
see.
property.
I see. So this is great. Let's take a quick break, Michael, and we'll be back after the break. Thank you. Welcome back to Wealth Matters podcast. I'm talking to Michael regarding self-storage, and I'm thoroughly enjoying our conversation. Michael, I have another question. What is your criteria to invest in self-storage?
Sure. So I'm kind of a value add guy. So I look for the distressed properties, as I said, and take this with a rule or with a grain of salt because it's just a rule of thumb. But generally speaking, I like to be able to double or triple the value of a property over 24 to 48 months.
Wow.
And some of the things I do very quickly to figure out if a property might have that kind of potential when I'm looking at either listed properties or talking to an owner is what's called a gross rent multiplier.
Mm-hmm.
So very
GIM.
quickly, if it's $24 a square foot to buy it, I want the annual rents to be at least $6 a square foot.
Okay.
That represents a gross rent multiplier of 4. Anything
Exactly.
4 or less, in my estimation, has a ton of potential. And I'll even look at something that's a 5 or below.
Okay.
And, I like to be in rural, secondary, tertiary markets just because the analysis and the exploration of the market is a lot easier, right? I'm not looking at 15 or 20 competitors like I would in a larger city or town. I'm looking at 2 or 3 competitors, and I can very quickly ascertain whether or not I'm going to win the race.
Right. So do you have any criteria about certain size of population?
I really don't. I own one of my best deals, probably tied for first place, is down in the least populated and poorest county in all of Florida.
Really?
And that gave me a little bit of pause and concern when I was looking at it. But it had some redeeming qualities that ultimately caused me to move forward with the deal. And I'm very happy that I did. So I'm not scared of towns of 1,000 people, to be honest with you. It clearly, the population has to be big enough to support it. But if there's no other storage in the area, you can still do really well.
Right. And then, as you said, most of the people would shy away from developing another storage in that area, right?
Yep.
So this is the question of the day, actually. What happens to self-storage during recession? And lots of people are thinking or talking about it, that there is something brewing or something's coming soon.
Yep.
Right?
Yep. Well, and as I mentioned before, I think the storage operators that'll be the biggest hit by any recession would be folks that are in the wrong stage of a development play. That being said, the industry in general tends to be relatively resistant and resilient when it comes to recessions. We've seen it over the last 2 where, it's not to say it's immune, but generally speaking, storage is affected far less than any other real estate asset on the planet, really. And it kind of makes sense if you think about it, though you would think demand might go down in a recession, people don't have the money. The truth is there's so much transition for the population when it comes to foreclosures or having to downsize.
Downsizing, yep.
Yes.
They want to keep their stuff, right? For $30-$40, they don't want to give them away.
Right, exactly. And if they go from a 3-bedroom apartment to a 2-bedroom apartment, they might save $300 or $400 in rent, and then they can get a storage unit the size of 1 bedroom, fill it to the brim for $80 or $100 a month.
Right.
So, that's not just a kind of an example that doesn't hold up under close inspection. If you look historically at the default rates, either during recessions or during good times, storage facilities default less often than any other real estate there is. Even single family houses, primary occupied single family houses default more often than storage facilities, which is saying something, because that's the roof over somebody's head.
Right. Yeah. And so people, when they have to downsize, they will move things into storage. And when they need to upsize, they don't even care about it. When the market's doing good,
more stuff.
Exactly. So which markets are you focused on right now, and why?
Yeah. So, aside from just generally speaking, secondary and tertiary rural markets, I tend to go where the deals are. So I don't have, specific criteria about a geographic location, other than, and this makes maybe a little odd for some folks listening, but again, it goes back to me thinking that this storage thing is supposed to serve my life, not the other way around. So, for example, I have 2 projects right now in the Carolinas, both within 2 hours of Charlotte. The reason I was looking in Charlotte for opportunities was because I have 5 friends down there that I don't see often enough. So
good idea.
part of my vision for my life is to see my friends more. This way, every trip down there, I do a little work and I get a burger with my buddies.
Right. And you can write it off.
Exactly. It's also not a coincidence that I own a property an hour and a half from Disney World. My wife's a Mickey Mouse.
Exactly.
Right?
And you can write off.
Exactly. Now, I will say, Maybe an answer that's a little more helpful to folks right on the surface is between my students and myself, we're finding the lion's share of opportunity for whatever reason is in the Southeast right now. We're finding a ton of deals in North, South Carolina, Georgia, Florida,
right,
even Alabama now.
exactly.
And
those are some great markets even for right now for multifamily or single family. So you're right, because we have huge migration into Southeast, right? So which makes sense. So now let's talk about your deals. Can you tell us about your worst deal?
Yeah, and you know what? I'm very fortunate to not have one that's gone upside down. Probably my least exciting deal from a dollars and cents standpoint is one I'm working on right now in North Carolina. Now it's very exciting. I don't know if anyone checks out the Facebook page. They can search the videos for the Forest property. It is cool. I mean, this place was fully abandoned for 10 years.
Oh, wow.
In a forest that looked like a zombie apocalypse. So we bought it earlier this year and we've completely renovated it so that it looks brand new. But we've been filling up a little more slowly than I anticipated. I was hoping for 3 to 4 move-ins per month, and we're in the 2 to 3 range. So we're only at 12% occupancy right now. I'm not cash flowing, but I didn't expect to cash flow for the first 6 to 12 months.
For something like that where it's completely abandoned.
Yeah. So it's been very cool from a construction standpoint. But I was very much spoiled by my last deal, which is the one I alluded to in Florida, probably the best deal. We bought it in that very small town in the middle of nowhere, Florida, and I only put $5,000 in. I brought in equity partners and private investors. It was a $500,000 project. And today, it's just about 18 months later, the properties, we took it from $500,000 to about 1.2, 1.3 million.
Nice.
And we anticipate we'll top out at about 1.5. Plus, we've got room to expand.
Oh, wow. So this is in the Florida, that county, huh? Wow, that's crazy.
Yes.
So that's it. So what did you do in that deal so that you were able to raise the value from $500,000 to over $1 million?
Sure.
1.2?
So really, when people ask me this question, I wish I could, say, oh, it was so hard, I'm a genius, you wouldn't get it. But the truth is, all we did, you wouldn't believe me if I told you how simple it is. I went in, I cleaned out shop. I mean, we cleaned out like 60 abandoned units. It had been neglected for several years. The owner was in the hospital, sadly. And so we really just started operating it again. Now, we did implement some online rental portal that we use in a call center. And we raised rates. We went from about 40% full to 90% full. Get this, in under 3 months when we bought it.
That's crazy. That's crazy.
I had projected 3 or 4 move-ins a month, and in month 3 alone, we had 53 move-ins. It was insane. Wow. Now, I'm not going to pretend I expected that to happen. It was a good deal, even if we only moved in 3 or 4 a month. It just would have taken longer. But we're the only facility in a 10-mile area, and so we kind of had a captive audience, and people wanted our service. They just couldn't get it from the old owner. And so when we moved in, it was relatively straightforward.
Yeah. And when you start adding amenities like, gates and codes, as well as clean out the shop, right? It's a nicer looking property. Of course, you are going to attract, right tenants.
Right.
Oh, that's awesome. No, I thoroughly enjoyed the discussion. How can my listeners reach out to you, Michael?
Yeah, I'd love it if they check out the YouTube page or the Facebook page. Simply search @Storage Rebellion on either platform. Or if they want to go right to the website, it's thestoragerebellion.com. I've actually also, I don't know when this will air, but I do a once a month 2-hour live Zoom call. And it's one of those, your first time's free. If you want to come check it out, you're welcome to do that. And if you like it, you can come back next month. If not, it's 2 hours of free education.
That's awesome. I'll put that in the show note. This should get published in about 3 weeks, but I'll let you know. Thank you so much, Michael. I thoroughly enjoyed our discussion.
As did I. Thanks for having me.
I appreciate it.